Good morning, students. And today is the third class on Ind AS 116. Students, in the last two classes, we have now fairly understood what Ind AS 116 talks about, how this Ind AS 116 is different in terms of accounting in the books of lessee, right? Where the lessee is required to capitalize all the leases in the balance sheet. When I say capitalize means lessee has to create a right of use asset and credit lease liability. Okay. So this accounting is more like a finance lease accounting. What we were doing in Ind AS 17, which was the earlier version of leases standard in Ind AS, and accounting standard 19. So students, we have also talked about in this particular standard, leases is a contract where the lessor conveys a right to control the use, a right to control the use of an identified asset, right? So we heard two new terms, right to control the use. In the earlier standard, the concept was right to use. In this standard, the concept is right to control the use, right? Right to control the use of an identified asset, right? For a period of time in exchange for a consideration. So students, we discussed the meaning of identified asset. We discussed the meaning of right to control the use. We discussed the meaning of lease term, right? We discussed the meaning of lease payments. So the entire definition we have already covered in the last two classes in detail, right? Along with the other concepts. So while talking about identified asset, we have understood that identified asset are those asset where number one, the asset, underlying asset is either explicitly or implicitly mentioned in the contract or agreement, right? That is number one. Number two, the lessor or supplier does not have substantive substitution right. What is meant by substantive substitution right? Means right to replace the asset for the benefit of the lessor. If the asset is getting replaced for the benefit of the lessee, then this right is not considered as a substantive substitution right. For example, if the asset got damaged, the car met with an accident, and for the benefit of the lessor is sending another asset. The lessor is replacing with the another asset. So in this case, the benefit lies with the lessee. The benefit does not lies with the lessor. So in this case, this is not a substantive substitution right. But if lessor can replace the asset for its own benefit, right, for its own benefit, in that case, it may consider that substantive substitution right exists and that asset will not be qualified as a identified asset. Then someone can ask, sir, for example, if somebody has given a space on a rental basis, right, in a big warehouse, and the space has not been earmarked, it is not a dedicated space. There is a big warehouse, right, big godown, which is having a 50,000 square feet of space, and that warehousing corporation is leasing 500 square feet of space to the lessee, right? Of course, there is a lease, there is a rent, there is a period, but the space has not been dedicated. Today, if they are giving a slot, let's say slot number 1, tomorrow they will give the slot number 5, right? So it is as per the warehousing corporation arrangement. So of course the asset is not an identified asset because the warehousing corporation has a right to replace the space. 500 square feet is okay, right? But it is not an identified asset. But if someone say that, you see, in this entire warehousing corporation, the slot number 1 will be given to you throughout the period of use, right? In that case, it will be identified asset because the lessor does not have a right to replace. Now the question arises, sir, if the lessee is paying a rental, lessor is receiving a rental, and you are saying from the lessee perspective, it is not an identified asset, then where the accounting goes? In that case, the accounting will not happen as per Ind AS 116. In that case, the lessee can do the expense accounting, means when the lessee is paying a rental, lessee will debit the rental expense and credit the bank account. Simple accounting. There is no requirement of capitalization of right of use asset. There is no requirement of depreciation of right of use asset. There is no requirement of creation of lease liability. There is no requirement of charging a finance cost on lease liability and then reducing the payment from that, right? So students, are you able to connect whenever I am saying it is not an identified asset, it is not covered under Ind AS 116? Are you able to connect? Then in that case, what will be the accounting? Because tomorrow, when you will appear in an interview, probably the interviewer will ask, see, this is not an identified asset, and you will get this concept in so many airline industry as well, where the airport location, where the airport counters, where they have the airport, they have the counter on the airport, right? So they are not capitalizing those kind of leases. They are not creating right of use asset. Why? Because because the airport authority, the lessor has a substantive right to substitute the asset. Okay, and that is why it is not coming under Ind AS 116. So what accounting they are doing? Every month they are paying a rent. What accounting they are doing? They are doing the accounting of rental expense debit to bank, right? Rental expense to vendor, vendor to bank. So you need to connect the dots. You need to understand, if it is not covered as per this standard, what does it mean? It means you will be able to avoid the complexity, the complex accounting of Ind AS 116, and you have to do simple accrual accounting, expense to bank accounting, right? Is that clear to all of you? Okay. Then friends, we discussed the right to control the use of an asset, and there we discussed the party, the lessee, should have a right to obtain largely, substantially, majorly all the economic benefit associated with the use of the asset, not the ownership, use of the asset. Plus, the right to direct the use of the identified asset should be lies with the lessee, right? If it is lies with the lessor, you cannot say that the control right to control the use of an asset has been transferred. And I have given an example of a car which is given to my friend, where the right to use is transferred, but right to control the use still lies with me, right? So there is a difference between right to use and right to control the use. Clear? So what happens if right to control the use of an asset does not lies with the lessee? In that case, again, it will not come under Ind AS 116. Sir, then where it will go? Of course, a normal accounting you have to do, like all the expense accounting, you have to do this expense accounting as well. Friends, then we discuss the concept of inception date of lease and commencement date of lease. And again, I took an example. Inception date of the lease is a date where the agreement has been entered, or principal terms and condition of the lease has been identified, right? Commencement date of the lease is the date where the underlying asset is handed over to the lessee, where the lessee got the underlying asset for the use. So inception date of the lease is the date where someone will identify, someone will means parties, lessor and lessee will identify, is it a lease? Sir, what does it mean? It is a lease, right? They are entering into a lease contract, so that will be a lease. When I'm saying identify a lease, again, that let's say you are the auditor of the company, and the company has entered into a lease agreement with the lessor. Then while you reading the agreement, what you will say? You will say, see, in this case, you are talking to a client, and you are saying, in this case, you does not have a, you does not have a identified asset. So the client will say, what the hell you are talking about? You are saying we don't have identified, we have identified asset. We are using this car which is provided by the lessor. Then you will say, because in this case, the lessor will have the substantive right to substitute, right? You are talking to your client and asking, if tomorrow the lessor will replace your car, can you stop him? He said no. So you are telling your client, see, while reading the agreement, the substantive right to substitute lies with the lessor, and this is not a lease which is coming under Ind AS 116, right? So identify a lease does not mean that that is not a lease. That is a lease or not a lease under Ind AS 116. I hope now you are able to getting understood. Now you are able to fairly able to, connect your mind with the real life situations that how these things are happening, right? Second, on the inception date, lessor will classify the lease into finance lease or operating lease. From the lessee perspective, there is no concept of operating or finance lease. From the lessee perspective, there is only a single lease model, no finance, no operating. But from lessor perspective, it still exists. It still exists, right? On the commencement date, you will determine the lease term and you will recognize the lease. You will recognize right of use asset and lease liability. Friends, so then we discuss the meaning of lease term. Can anyone tell me what is the meaning of lease term? I have given you a formula on the Excel file. Lease term is equal to this plus this plus this plus this. So can anyone tell me quickly what is the meaning of the lease term? Can you please tell me what is the meaning of the lease term, guys? Yeah. Thank you, Shruti. Thanks for the feedback. And glad that you guys like the revision. Revision is very important to connect from the last class and then to move on to the new class. And it is also helpful when you are listening the real life or the live sessions, because it's a morning 7 a.m. and when you are hearing the revision things, so it will be established in your mind. So that's a good time to revise as well. Yeah, can you tell me quickly what is the meaning of lease term? I have given you 3 examples in Excel file, yeah, to explain that how this lease term is working. Rahul has written that lease term is equal to NCP plus RFP plus ORP plus OTP. What is NCP? Non-cancelable period. What is RFP? Rent-free period. What is ORP? Optional renewal period. What is OTP? Optional termination period. Very good. Lease term is equal to non-cancelable period, which is also known as lock-in period. Lock-in period, right? Have you ever purchased an insurance policy? Yeah. So when you purchase an insurance policy, there is a lock-in period in insurance policies also. What does it mean? The lock-in period means you cannot withdraw, you cannot surrender your policy, you cannot withdraw your money from that insurance policy, right? For a period of 1 year, 2 year, 3 year, whatever it may be. So the point is, the point is, when I'm talking about non-cancelable period, it is a period which cannot be cancelled. Sir, if still lessee or lessor wants to terminate, so the parties have to bear the penalty to the extent of the balance period of the rent. That is the meaning of non-cancelable period. Plus, rent-free period, I have again given you an example, like fit-out period in case of malls, right? Rent-free period. So normally the lessor provides some rent-free period to the lessee so that the lessee will start his business there. Plus optional renewal period. Optional renewal period has to be taken only when the lessee is reasonably certain that he will avail the renewal option. And I've given you enough example, right? That when it can be concluded that the lessee will be able to avail the option of renewal. Plus optional termination period. ऑप्शनल टर्मिनेशन पीरियड इज रिवर्स ऑफ ऑप्शनल रिन्यूअल पीरियड, बिल्कुल उल्टा है. ऑप्शनल रिन्यूअल पीरियड में आप कहते हो कि लेसी रीजनेबली सर्टेन है कि वो रिन्यूअल ऑप्शन अवेल करेगा. ऑप्शनल टर्मिनेशन पीरियड अगर है तो आप कहते हो कि लेसी रीजनेबली सर्टेन है कि वो ऑप्शनल टर्मिनेशन पीरियड अवेल नहीं करेगा. So in case of optional termination period, the lessee is reasonably certain that he will not avail the termination period. So all these periods needs to be covered, added to conclude the lease term, because lease term is very important from the perspective of doing the Ind AS 116 accounting. Right, guys? I hope it is clear to all of you. Viraj, Ishan, Tanisha, Shruti, Salesh, Rahul, Ridhima. Neha, I hope it is clear to all of you. Very good. We discussed this lease term at length. In case of optional termination period, we discussed the three aspects as well. And we discussed that if the both the parties have a right to terminate, then you are not required to consider the optional termination period at all. If only lessee has a right to terminate, in that case, you have to see the reasonable certainty to not to avail the termination option, right? If only lessor has a optional termination period, right? Lessor has a right to terminate only. In that case, you have to include the optional termination period as a lease term, right? So these three things we have discussed that day. Reassessment of lease term, we discussed that, wherever there is an optional renewal period or optional termination period, you are required to reassess your lease term on a continuous basis. You have to monitor on a continuous basis, right? Because due to the updated facts and circumstances, there could be a situation where earlier you were thinking about, oh, I will surely renew this lease period, but now you want to discontinue this, right? And this has happened worldwide after COVID. This has happened worldwide. The companies which were thinking that, see, I will be there in this space for next 10 years, but when this COVID happened, so after COVID, after 6 months, 12 months, whenever the lockdown completed, the companies has exited from that place and moved to a different place, right? Why? Probably due to the smaller area requirement, due to the reduction in rentals. So companies has done that, right? So the assessment has completely been changed, right? Has completely been changed. So this is how it is happening, right? Recently, you have heard about WeWork, right? So WeWork were providing the office space. Have you heard about WeWork, right? So at time WeWork became the this largest this office space provider. So now WeWork became insolvent, right? They become bankrupt. So this is a news just a month ago or 15 days ago, right? So guys, these wherever the judgment and estimate is involved in accounting, wherever the judgment and estimate is involved, you guys need to review these decisions. You guys need to review all these decisions, right? Then friends, so we discussed right to control the use, identified asset, lease term, and now last is consideration, which is lease payment. Can anyone tell me without looking at this slide? Can anyone tell me quickly what was the meaning of the lease payments from the lessee perspective? How many lease payments were there? And from the lessor perspective, how many lease payments are there? These concepts are very, very, very important, guys. So, Mr. Abdul, if I talk about not only as a CA final student, if I talk about for chartered accountant who are going to appear in an interview, who will join the financial reporting vertical of a listed company or large companies, these concepts plays a very important role. The accounting is quite simple. You have to do the present value, which you are doing since ages. आज की डेट में अगर मैं किसी भी सीए फाइनल के स्टूडेंट को बोलूं कि ये 5 कैश फ्लो हैं एंड ये आपको डिस्काउंट करना है कैश फ्लो, 10% इज द डिस्काउंट रेट, 5% इज डिस्काउंट रेट, would you be able to do? Every CA final student would be able to do, because they have already learned the concept of present value accounting, discounting accounting, because it is not only in accounting, it is in capital management, it is in MAFA. So in other subject also, the discounting comes into the picture. So friends, my question is, what is meant by lease payment? Can anyone tell me what is meant by lease payment? Can you please write on that query link of ICAI? Kusuma has mentioned, from the lessee perspective, there are 5 components of lease payment. From the lessor perspective, the 5 components same plus one additional component means total 6 component. Bang on, Kusuma. Thank you so much. Bang on. Can anyone tell me further that what are those 5 payments from the lessee perspective and what is an additional payment from the lessor perspective? Yeah. So Rahul has mentioned from the lessee perspective, the five payment includes number one, fixed payment plus in substance fixed payment. Very good. Plus variable payment. Very good. Plus exercise price in case of a purchase option. Great. Plus penalties for termination plus residual value guarantee. Very good. Fixed payment we discussed, like the rent is 1 lakh rupees every year. This is fixed payment. In substance fixed payment means, for example, 10% increase is in every year. So the increase portion, the difference between 1 lakh and the difference between the increased rent, 1 lakh and increased rent, that is your in substance fixed payment. In substance fixed payment, right? So that is known as a in substance fixed payment. Why it is known as fixed payment in substance? Because sitting today, I know that what will be my rental after 5 years. I started with 1 lakh rupees, but I know that if the 10% increases every year, so what is the rental in the fifth year, fourth year, third year, second year, and today? I am aware, right? So the escalation or increase, that increase is known as in substance fixed payment, right? Or one example we took, you remember that the rent was 1 lakh rupees every year. This example, yes, plus higher of 2% of the previous sales, right? 2% of the previous rental or 1% of the previous year sales, higher of. So it means sales I am not aware, but rent I am aware. So it means and then the formula is higher. Higher means if the 1% of sale is higher than 2% of rental, then that amount will be applicable. Or if 1% of sale is lower than the 2% of rental, of course 2% of the rental will be applicable. So in any case, the minimum escalation is 2% of the previous rental. So in substance, to the extent of 2% of previous year rental, it is fixed. In this particular question I'm talking about, because this question we have discussed in the last class. So this is known as an in substance fixed payment. What is variable lease payment? Variable lease payment is that payment which is dependent on an index or a rate. Or a rate means, or index means like inflation rate, LIBOR, MIBOR, right? SBI, MCLR, okay? Wholesale price index, retail sale price index, consumer price index. So if the variable lease payment is depending on these aspects, then it will be covered under the lease payments. Sir, if the variable lease payment is depending on the quantity produced, depending on the number of people, in that case, it is not a future lease payment from the perspective of Ind AS 116, sir. But of course, the lessee will pay. So where the accounting will go? The accounting is expense account debit to bank account, right? Simple. Exercise price of a purchase option, right? Again, we discussed in the leases, sometimes there are purchase option. For example, the company has given its printer on a lease basis. Normally, you know what happened? Even in my company, there are some HP printers which the company has taken on a lease basis. And the lessee has given a right to purchase option, right? And the lessee has told that, sorry, the lessor has given the right to purchase option, and the lessor has told to the lessee, to my company, that after 3 years, if you want to purchase this printer, you will be able to purchase at 1,000 rupees or 5,000 rupees. Sir, can you, let's say in interview, someone will ask you a question, what is the benefit of giving a exercise price? What is the benefit of giving a exercise price? Can you tell me कि एक लीज कॉन्ट्रैक्ट में लेसोर परचेज ऑप्शन क्यों देगा लेसी को? Why lessor will give a purchase option to the lessee? Can anyone tell me? It's very common sense in India, I would say. Very common sense. Let's say if I took a car on a lease basis, right? I am a lessee and the owner is someone else who is a lessor. If I know that I have to use this car for 3 years and return it back to the lessor, right? So probably if it is a leased car, right, I will not take care of the car, particularly in that manner in which I am taking care of my own car. अगर मैंने अपनी गाड़ी खरीदी और मैं अपनी गाड़ी चला रहा हूं, अपनी कार चला रहा हूं, तो शायद मैं उसकी जिस तरीके से मेंटेन करूंगा उस कार को, लीज वाली कार को मैं उस तरीके से मेंटेन नहीं करूंगा. बट एट द सेम टाइम, if lessor will say if the lessor will say, see, you have to use this car over a lease term of 5 years, and at the end of the 5 year I am giving you a purchase option. And normally what happened, the exercise price is very low. The exercise price is very low, right? So normally what happened, if I know that after 5 years still the car is usable, the car is good for use, after 5 years the car is good for use, if I'm aware that car is good for use, okay, car is available for use for 5 years, and after 5 years I can purchase this car at 25,000 rupees. Sitting today, I know that after 5 years I will have a purchase option. Doesn't matter, I will exercise that purchase option or does not exercise that purchase option. But today I am thinking in that way that since I am using this car for entire 5 years, so this car is with me only, right? So if I'll use this car in a very decent manner, I'll maintain this car. Of course, this is a win-win situation for me, right? So generally, the purchase option is provided in two manner. Number one, from the lessor perspective, if the lessor provides the purchase option, generally the lessee treats that asset as its own asset, and the care and maintenance grows like a own asset. That is number one. Number two, it is also an added advantage to the lessee, because in case of a long-term leases contract, right, the lessee is using that asset for its own business, right? The lessee has already occupied a space for that particular asset. The lessee is doing its own business in that asset. The lessee has maintained that asset. And whenever someone is doing a business, the business has to be done for a long run, not for a short run, right? So this will also gives an incentive to pay a premium amount to pay a premium amount of lease, right? In case the purchase option is provided. So this is more of a logical sense. This is more of a commercial sense, that why in a lease contract purchase option are provided, right? I'm not only giving you the CA final exam perspective. I am giving you the real life perspective, interview perspective. After becoming a CA, how these things you will have to think about. I'm giving you that perspective, right? Exercise price, we understood penalties for terminating the lease. If you are sitting today, you are reasonably certain that you will terminate the lease after some period of time. So of course, if there is a penalty, you have to consider that penalty in the future lease payments. Plus residual value guarantee. You have given some guarantee of residual value to the lessor, right? Being a lessee, you have given a guarantee. So these 5 items needs to be clubbed, added, and this will be your future lease payment. In the last class in Excel file, I have told you that, year wise, that how this lease payment needs to be taken into consideration. In case of a lessor, of course, whatever you are paying as a lessee, the lessor is receiving as a lessor. So instead of lessee, if someone else is giving a residual value guarantee to the lessor, that also needs to be taken into consideration for calculating lease payment from the lessor perspective, right? Friends, this is what we have discussed in the last class. In the last half an hour, I have done the complete revision of last 2 classes. Now, let's start the journey further. If you guys have any question on the last 2 classes, on these 5-6 concepts, please ask me quickly, right? I will answer that. and then I can move to the next concept. Please write down quickly on the query link which is given by the ICAI. Neha has confirmed, no sir, we have fairly understood all the concepts. Very good. And she is saying that sir, we have also covered all the questions of study material as well. Very good, Neha. So this is what is expected by every student, that after the class, please refer the study material and solve all the practical questions, all the case studies from study material. Okay, Shailesh, Viraj and Kusuma has also confirmed. Very good. Let's move on. Friends, so far you have fairly understood that in Ind AS 116, you have to recognize right of use asset on the basis of present value of future lease rental. Now, what is this present value? This present value is means discounted value of future lease rental, future cash flow. Now, what is this discounted value? It comes by the discount rate. What is the discount rate? Discount rate is nothing, it's the interest rate, right? So now the question is, for example, I am a lessee, right? I am a lessee. I have taken an asset on a lease basis for 10 years. Lease term is 10 year, right? Underlying asset is, for example, car. Okay. And I am paying a future cash flow of 1 lakh rupees every year. This is what is there in the contract. Now the question is, I have to pay 1 lakh rupees every year, right? I have to pay 10 lakh rupees. So of course, right of use asset, I need to consider on the basis of present value of the future lease rental. Now the question arises, sir, what is the discount rate which I need to consider while calculating the present value? Now standard says that for calculating discount rate, you have to take interest rate implicit in the lease. You have to take interest rate implicit in the lease. Interest rate implicit in the lease, right? Interest rate implicit in the lease. What is meant by interest rate implicit in the lease? Interest rate implicit in the lease is like, please hear me. Yeah. So hear me with full focus. Interest rate implicit in the lease means, right? Means the IRR, internal rate of return. For example, I am a lessor, right? I am a lessor. I have purchased a car for 10 lakh rupees. I have purchased a car for 10 lakh rupees. So today I have purchased Hyundai Extra. Have you heard about Hyundai Extra? A new car which is launched by Hyundai. So today I have purchased Hyundai Extra car. What is the fair value of Hyundai Extra? 10 lakh rupees. Because I have purchased, that is the market value. While purchasing the car for rupees 10 lakh, I have also paid some stamp duty, registration charges, etc., 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 which is like initial direct cost. Initial direct cost, right? For buying a car, I need to pay some road tax, I need to pay some stamp duty, I need to pay some registration charges, I need to pay some authority fees. Okay. So fair value of the car is, let's say, 10 lakh rupees. 1 lakh rupees I have paid on account of these stamp duty, charges, etc., etc., etc. So 1 lakh rupees initial direct cost. What is cost to me? What is cost to me? I am talking about the lessor, purchaser, owner. 11 lakh is cost to me, right? 11 lakh is cost to me. Yes. Guys, I need that you should be more responsive. I can see very few responses from few students. Please answer it. So simple question I'm asking, 10 lakh rupee is the cost plus 1 lakh rupee is initial direct cost, charges. So total cost is 11 lakh rupees to me, right? And I have leased it out for a period of 10 years. I have leased it out for a period of 10 years. Okay. Now, today I have spent 11 lakh rupees, and let's say I'll be able to get a residual value. When I purchased a car, I expect a residual value. So the residual value of the car is, for example, 1 lakh rupees. So sitting today, I know that today I spent 11 lakh rupees, and I am aware that after 10 years, I will be able to receive 1 lakh rupees from the residual value. From the residual value. So my first question is whether 1 lakh rupee which I will be receiving after 10 years, whether that 1 lakh rupee has the same value of 1 lakh today also. मतलब क्या जो 10 साल के बाद में 1 लाख रुपए रिसीव करूंगा, क्या उसकी वैल्यू आज भी 1 लाख रुपए होगी? Of course not. Of course not. Let's say, think like this. If after 10 years you will need 1 lakh rupee, probably you have to deposit 30,000, 40,000, or let's say 50,000 rupees today. If you will do a fixed deposit of 50,000 rupees today, in the next 10 years, it will become 1 lakh rupees. So it means the 1 lakh rupees after 10 years does not have a value of 1 lakh rupees as of today, right? It is somewhere like 50,000, 60,000 rupees. Likewise, if I am receiving, the cost is 11 lakh rupees, right? 1 lakh I'll get from residual value, which is not guaranteed even. Plus 1 lakh rupees every year I am getting by leasing that car on account of lease rental. So can I say, let's say 10 lakh rupees, 11 lakh rupee was the cost of my car. 10 lakh rupee I am getting as a lease rental, and 1 lakh rupee I am getting as a residual value. Can I say that I have a very strong proposition? I have a very profitable case, or let's say no profit, no loss cash. No profit, no loss cash. Can I say that this is a case of no profit, no loss? Answer is no. This is a case of loss. Why? 1 lakh rupees every year I'm getting a 10 lakh rupees. 1 lakh rupees residual value I'm getting after 10 years. Again, in totality, I'm getting 11 lakh rupees. But the point is, I'm into losses just because of time value of money. I am paying 11 lakh rupees today. My cash out is 11 lakh rupees today, and my cash inflow is in the next 10 years. It is staggered in the next 10 years. And that is why it is not a value proposition. It is a loss-making proposition. It is a loss-making proposition. Right? Friends, now coming back to this scenario, what is meant by interest rate implicit in the lease? Interest rate implicit in the lease is that rate to the lessor which equalizes the fair value of the asset plus initial direct cost is equal to present value of lease rental plus present value of residual value, unguaranteed residual value. So the rate which equalizes both the equation, this will be known as your interest rate implicit in the lease, right? Interest rate implicit in the lease. Now the point is, how come I be able to know that what is the discount rate, what is the interest rate which is there with the lessor, right? Probably lessor has also factored some profit margin as well. तो लेसोर ने क्या रेट यूज किया है, लेसोर ने क्या, सो द पॉइंट इज, फॉर एग्जाम्पल if I have purchased an asset for 11 lakh rupees, I am giving it on a lease basis for 10 years. What should my lease rental? What should be my lease rental so that when I discount those lease rentals today, I will get this 11 lakh rupees plus some profit margin if lessor is expecting some profit margin. Now the point is, how can I be able to know that what is the interest rate which is implicit in the lease? What is the discount rate which the lessor has taken? How much amount lessor is earning? How can I be able to know that? I cannot be able to know that. So that is why standard says that if the lessee is not able to aware the interest rate implicit in the lease, right? In that case, the lessee has to use the incremental borrowing rate. The lessee has to use the incremental borrowing rate. The lessee has to use the incremental borrowing rate. Incremental borrowing rate of whom? Incremental borrowing rate of the lessee itself. मतलब मैं अगर लेसी हूं तो मेरा क्या इंक्रीमेंटल बोरिंग रेट है, अगर आज मैं लोन लेने जाऊं तो बैंक मुझे क्या रेट देगा, सो दैट विल बी द इंक्रीमेंटल बोरिंग रेट फॉर मी. और इफ आई एम अ डेट कंपनी, मेरे पास ऑलरेडी डेट है, तो मैं क्या रेट पे करता हूं उस डेट पे, दैट कुड बी द इंक्रीमेंटल बोरिंग रेट फॉर मी. आई होप इट इज क्लियर टू ऑल ऑफ यू फ्रेंड्स. आई होप इट इज क्लियर टू ऑल ऑफ यू. इज दैट क्लियर? इज दैट क्लियर फ्रेंड्स? क्लियर और क्लियर? क्लियर और क्लियर? क्लियर. Okay. So I believe my Excel file is visible to all of you. I believe my Excel file is visible to all of you. Is it visible? So please write down the concept of interest rate implicit in the lease. Implicit in the lease. Interest rate implicit in the lease. Interest rate implicit in the lease is the rate which equalizes the below equation. Which equalizes the below equation. And what is the equation? What is the equation? The equation is where the present value of lease rentals, present value of lease payments to the lessor, we are talking from the lessor perspective, to the lessor, plus present value, because the residual value will also received in the future, present value of unguaranteed residual value is equal to what? Fair value of the asset plus initial direct cost. Right? This is the equation, right? This is the equation. In case interest rate implicit in the lease is not available to the lessee, because this is the lessor rate. Interest rate implicit in the lease is not available to the lessee, then lessee needs to identify the incremental borrowing rate to the lessor, to the lessee. Incremental borrowing rate to the lessee. I hope this is clear to all of you. Very simple. Yeah. Now let's go back to the next concept. Let's go back to the next concept. Initial direct cost, right? So we just heard the concept of initial direct cost. Fair value asset plus initial direct cost. What is meant by initial direct cost? What is meant by initial direct cost? Although I have already taken an example of initial direct cost. Kusuma, Shruti, Jigar, Abdul, can you please give me an example of initial direct cost? And this concept is as simple as the concept which you guys have learned in Ind AS 16 property, plant and equipment. You remember the directly attributable cost, initial direct cost at the time of acquisition of PPE. Yeah. So when you are purchasing a PPE like machine, you are capitalizing the freight, transportation, installation, consultant fee. But this is a lease. This is a lease, right? This is a leased asset, and where you are getting a right to use, where you are getting a right to use, right? So what could be your initial direct cost? Your initial direct cost could be, for example, if you are getting a property on a lease basis, right? Might be you have to pay some brokerage commission. You have to engage a property dealer. That could be your initial direct cost. Number two, your legal fee. For example, the lessor says that you have to get this agreement registered in the court of law. You have to pay to the advocate. Stamp duty, right? Lease documentation cost, which is again like a legal fee, right? So probably there were existing tenant which who are living in that accommodation. You are paying to getting those tenants move out, right? Because lessor is saying, see, I am charging a very cheap rental. I am charging a very reduced market rental from you. Now this is your headache, and I have accepted that. Okay, don't worry, right? I will I will get these existing tenant moved out from this place. Okay. So these are the examples. These are the examples of these are the examples of initial direct cost. Initial direct cost is a incremental. Initial direct cost is nothing. It's an incremental cost of obtaining a lease that would not have been incurred if the lease had not been obtained, except for such cost incurred by a manufacturer, dealer, lessor in connection with finance lease. So I'll discuss this concept later on. But what is initial direct cost? Initial direct cost is those costs which would not have been incurred if if the lease has not been entered, right? If the lease agreement has not been entered, if the lease has not been entered, this cost would not have been incurred. This cost would not have been incurred. What is not part of initial direct cost? Like employee salary, it is not part of initial direct cost. Legal fee before the execution of the lease, negotiating lease terms and conditions, advertising, depreciation, amortization. These are the non-excludable costs. These costs are not included. These costs are not included. These costs are included. These costs are included, right? Clear? Initial direct cost, is it clear? So what is meant by initial direct cost? I hope my Excel file is visible to all of you guys. Initial direct cost. It is also known as IDC. IDC. Initial direct costs are those costs. Initial direct costs are those costs which are the incremental costs which would have been incurred in connection with entering into the lease contract only, like legal fee, stamp duty, right? Stamp duty, port fees, etc. Okay. So these are the example of initial direct cost. These are the examples of initial direct cost. Right? Now, friends, we have reached to the heart of the standard. Right? When I say heart of the standard, means this is the main part of this standard, Ind AS 116. And this is the big change Ind AS 116 brought in case of a lessee accounting. Treatment in the books of the lessee. Treatment in the books of the lessee. Right. So now we have reached to the recognition and measurement aspect of this right of use asset. When I talked about the PPE standard, property, plant and equipment, I have talked about what is the definition of PPE, what are the recognition condition of PPE, what is meant by cost, right? I spoke all those things. And then I discussed the measurement at initial recognition, measurement at subsequent recognition. So now I'm going to discuss measurement of Ind AS 116 asset, which is nothing, which is right of use asset in the books of the lessee. So measurement of right of use asset and lease liability in case of initial recognition. At the time of initial recognition, what accounting needs to be happen? Right? What accounting needs to happen? So before discussing this accounting, I mean to say, what are the component of right of use asset, how this accounting has to happen. Okay. So let me give you an example first. Okay. Let me give you an example. Let me write an example here. And then I will discuss this concept of that at the time of initial recognition, at what value right of use asset will be recognized. Okay. I hope this Excel file is visible to all of you, right? Is it visible to all of you? Accounting treatment in the books of lessee. This is the most critical concept or aspect from the examination point of view. Accounting treatment in the books of the lessee. I am giving you an example. A Limited has taken a leasehold office from B Limited. So B Limited is a lessor, A Limited is a lessee, right? On 1st April 2023 for a period of 5 years. For a period of 5 years. Now, the period is 5 year and has taken a leasehold office from B Limited on 1st April 23, right? For a period of 5 years. Now, some more facts are given. And what are the facts which is given? A Limited has paid. A Limited has paid an advance rent. A Limited has paid an advance rent. A Limited has paid an advance rent, right? For rupees 10,000 before 1st April 2023. Right. The remaining rent A Limited will pay as follows. After 1st April 2023. Year 1, 2, 3, 4, 5. Year end. Right? Amount. 90,000 because 10,000 already paid. 1 lakh. I hope my Excel file is visible to all of you. So because one of the student is saying that Excel file is not visible. So guys, are you able to see my Excel file? Because this is there on my screen sharing. Okay, Shruti has confirmed that it is visible. This is a complete question on right of use asset, initial recognition of right of use asset. This is a complete question. Okay. So this is the remaining amount of rent A Limited will pay as follows after 1st April 2023. This is the year end on which the amount is going to be paid, right? And A Limited, A Limited has also paid rupees 20,000 for lease registration in the court of law. The company has done some leasehold improvement in the lease premises, which lessor has told to the lessee that at the end of lease term, he will be requiring the office in the same condition in which it was given to the lessee, right? It was given to the lessee. The lessee is expecting the restoration and dismantling cost of rupees 50,000 at the end of the lease term. You are requested to provide the accounting entries in the books of the lessee as at 1st April 2023. Let me know if the question is clear to you or the question is not clear to you. Please do let me know if the question is clear to you. Please let me know if the question is clear to you. Whether the question is clear to you. Whether the question is clear to you or not. A Limited has taken a leasehold office from B Limited on 1st April 2023 for a period of 5 years. Very simple. Lease term is 5 years. Yeah. A Limited has paid an advance rent of rupees 10,000 before 1st April 23, let's say 15th March, because he wants to ensure that this property is getting blocked. This lessor would not give this property to anyone else. So that is why he paid some 10,000 rupees as a token amount. The remaining rent A Limited will pay as follows after 1st April 23, that is 31st March 24, 25, 26, 27, 28, right? Means at the end of every year. In the first year, it was 90,000 rupees. Why? Because the 10,000 rupees is given as an advance and the future lease rentals are 91,111. A Limited has also incurred an initial direct cost to the extent of rupees 20,000. A Limited, since has operating an office in this lease premises, so A Limited has done some leasehold improvement. But lessor says that no, I need my office in the same condition in which I have given it to you. I need these 4 walls. I don't need any furniture, fixture, etc., etc., etc. So in that case, A Limited has to incur a site restoration and dismantling cost of rupees 50,000 at the end of the lease term. The question is, you are requested to provide the accounting entries in the books of the lessee as on 1st April 2023. Right. One more concept is given in the question. Let's say the question is that the incremental borrowing rate, of A Limited, which is lessee, less incremental borrowing rate is 10%. Whether question is clear to all of you? Shall I start solving this question? Shall I start solving this question? Okay. Solution. All, we all are aware in this case, on the commencement date, the accounting will start on the commencement date, on the commencement date, the right of use asset and lease liability needs to be, the right of use asset needs to be created, right of use asset needs to be recognized, right? Now, what is the meaning of right of use asset? So, right of use asset is equal to right of use asset is equal to or includes the following. What is meant by right of use asset? Right of use asset includes a present value of future lease payments. Present value of future lease payments. What is meant by present value of future lease payments? What is meant by present value of future lease payment? Means in future, commencement date is 1st April. In future, I am paying these amounts. So I need to do the present value of future lease payments. Number 2, B. What is B? Any lease payment made on or before the commencement date. Any lease payment made on or before the commencement date. Any lease payment made on or before the commencement date. C. Any initial direct cost incurred by the lessee. D. Any initial direct cost incurred by the lessee. D. Provision for asset retirement obligation. And this any lease payment made on or before the commencement of the lessee, right? If there is any lease incentive, that lease incentive, so any lease incentive received by the lessee. I'll write in this way: present value of future lease payment plus, I'll write like this, plus, right? Minus any incentive received plus initial direct cost plus this. This is the formula of right of use asset. Present value of lease payment plus any lease payment made on or before the commencement date, any lease incentive received by the lessee, initial direct cost incurred by the lessee, provision for asset retirement obligation, right? So now I need to pass an accounting entry. First of all, let's get the answer of each and every line item. Present value of future lease payment. First of all, let's calculate the present value of future lease payment. What is the present value of future lease payment? How to compute the present value of future lease payment? What is my years? 1, 2, 3 year end. These are my year-end amounts, right? What is my present value factor? PVF at the rate of 10%, right? Because these payments are at the end of the year, right? 1 divided by 1.1 comes out at 0.909. This divided by 1.1. This is how your present value factor will be calculated. This is how your present value factor needs to be calculated. Then your present value, and your present value is what? This multiply by this, right? This will be your total. Friends, whether my screen is visible? Am I audible now? I hope I am audible now. Okay. So the first one is present value of future lease payment. I hope this is clear to all of you. Present value of future lease payment is clear to all of you. It is clear. Present value of future lease payment. So present value of future lease payment comes out at what? The first question. The first question is, it is 369,988. 369,988. Right? This is my present value of future lease payment. Any lease payment made on or before the commencement date. What is the lease payment made on or before the commencement date? So there is an advance rent of rupees 10,000 which has been paid. Advance rent of rupees 10,000 which has been paid. 10,000. This is the advance rent of rupees 10,000 which has been paid. Okay. Advance rent of rupees 10,000 which has also been paid. This is, I believe this is quite simple. This is quite clear. Any lease incentive received by the lessee. This is not given in this question. Initial direct cost incurred by the lessee. Whether lessee has incurred any initial direct cost. So it is given in the question that 20,000 rupees lessee has paid on account of lease registration. On account of lease registration. 20,000 rupees. Provision for asset retirement obligation. Provision for asset retirement obligation. Now, this provision for asset retirement obligation, right? This would be on the basis of present value. Why? Because this provision you are creating as per Ind AS 37. You remember the same concept was there in Ind AS 16 also, in property, plant and equipment also. Sitting today, you are estimating your liability, your outflow after 5 years. So if you are expecting today that 50,000 rupees will be incurred after 5 years, what is the value as on today? What is the value as on today? So you have to credit this asset retirement obligation on the basis of present value of the future cash flow, on the present value of the asset retirement obligation. So you need to compute now you need to compute present value of future retirement obligation, right? Present value of provision for asset retirement obligation, year end amount, PVF, PV. Year end, what is the year end? 5. What is the amount? So year end is 5. Let me just copy this last example. What is the amount? Amount is 50,000. What is the value? The present value factor at the rate of 10% at the end of 5 years is 0.621. And what is my present value? I hope this calculation, you all are comfortable with this calculation. You all are comfortable with this calculation, guys? How I have arrived at the present value of provision for asset retirement obligation? Yeah? Clear? So this 31046, this will be my present value of future asset retirement obligation. Now the point is, what is my right of use asset? My right of use asset is equal to sum of these items, right? Total of these items. 431034 is my right of use asset. Now the point is, sir, what is the accounting entry? We understood this. What is the accounting entry? Right of use asset account debit. 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 Right. So I'll keep this open now. To what? To what? To lease liability. To lease liability. So lease liability means present value of future lease rental. Lease liability means present value of future lease payment to the extent of present value of future lease payment, right? Credit. Lease liability credit. Okay. Lease liability credit. And with what value I'll credit my lease liability? With what value I'll credit my lease liability? I'll credit my lease liability with 369,988. This is what I'm going to pay in future. 2. Cash. Or I would say, the accounting entry which I have passed. When I paid 10,000 rupees, what accounting entry I had passed? What accounting entry I had passed for advance rent? Accounting entry for advance rent paid before commencement date. Tell me what accounting entry I have passed before commencement date. Can you tell me the accounting entry I have passed before commencement date? Of course, I must have, being a lessee, I must have debited the lessor because I didn't got the premises. A lessor account debit to bank account, right? This accounting entry I would have passed 10,000 rupees. 10,000 rupees debit, credit. Now what I'll do, since I have debited the lessor, I'll credit the lessor. Technically, entry is right of use asset account debit to bank account, to lessor account. I believe it is clear now. To lessor account by 10,000, right? Now, I have also incurred initial direct cost. I have also incurred initial direct cost to bank by the value of initial direct cost, right? Credit to bank credit. I have incurred some expenses, 20,000. So this is my initial direct cost. right? And that is my lease payment made on or before commencement date, right? Now I have to create a provision for asset retirement obligation, right? So I'm not paying anything today. So now I need to create a provision to provision for asset retirement obligation. I'll write as a ARO, right? Credit. By what value? It has to be credited by 31046. Now my right of use asset has to be debited by these all values 413034. I believe after this example, the calculation concept of right of use asset is clear to all of you. This is the accounting entry which is going to be passed on 1st April 2023, right? Accounting entry as on 1st April 2023. Accounting entry as on 1st April 2023. Friends, do let me know if you have any question, if you have any query on this accounting entry. Kirti is asking, sir, can you explain lease incentive received by the lessee also? Yes. First of all, what is the lease incentive? Lease incentive, for example, what is meant by lease incentive and why the lessor is giving a lease incentive? Lease incentive is something different. The lessor is giving some money, some incentive to the lessee. Why lessor will pay some incentive to the lessee? Can you tell me why lessor will pay such things, such amount to the lessee? Friends, have you seen any new mall? Have you seen any new mall? Have you seen any new mall in Gurgaon, in Noida? So there are a lot of new malls which are getting constructed. What happens when a new mall is getting constructed? There are some big outlet. There are some anchor outlet like Lifestyle, Big Bazaar. Big Bazaar was in earlier time. Now there is no Big Bazaar. So Big Bazaar, PVR, Lifestyle, Max. Okay. It could be Reliance Fresh. It could be Chroma. It could be Vijay Sales. These all big outlets are there. Okay. So to approach this big outlet, what to approach this big outlet, what these lessors are doing, what this mall management are doing, they are offering some incentive to the lessee, right? Because what happened when this big outlet will come in the mall, first of all they'll occupy a big space, and that is why it is also known as anchor outlet. So let's say if DMart is there, if PVR is there, so first thing is very clear, PVR will occupy a big space, right? That is number one. Number two, when this PVR will open in the mall, there will be a footfall which started coming in that mall, right? A lot of people will be coming to watch the cinema, to watch the movie in that mall, right? If Vijay Sales is there, Chroma is there, Sargam Electronic is there, Lifestyle is there, Max is there, Reliance Fresh is there, right? DMart is there. So it carries a lot of footfall, which will inspire or encourage the other outlet to get there, right? And I'll give you a very small example. So one of the property dealer, from whom I have purchased my flat, so he was calling me day before yesterday and he told me, that Mr. Alok, I have a very good office space for you. I told, where you are talking about. So he told me that in New Gurgaon there is an office space. I said, okay, what is the cost and what is the benefit? The dealer told me that, in that particular mall or in that particular of commercial tower, uh, the Domino's has already signed the agreement. The Pizza Hut has signed the agreement. The Social, but which is a pub, which is a club, they have signed an agreement. The Chroma, Tata Chroma has already signed the agreement. So, and that is why the property price has also been increased. So, first of all, why he is taking these names? Why he is taking these names to me? He is taking these names because in this entire commercial tower, when this 4 5 big anchor outlet came, of course, those people will also come who are not coming for this office space, who are not coming for any work purpose, right? And and this these outlet will create a footfall in that particular office tower, right? In that particular office tower, and that is how it creates a value, it add a value to that commercial space. Okay, friends, to approach these kind of big outlets, these lessor provide some incentive to the lessee. For example, lessor will say that I'll give you 5 lakh rupees upfront as a lease incentive, right? If you will take a space in my commercial tower, right? So these lease incentives have to be netted off from right of use asset. So let me put this example here only. I have already explained this entire example to you guys. Now now I am also giving you the example of lease incentive as well. So I'm extending my example, and I'll write here only B Limited. B Limited has given a lease incentive of rupees 25,000 at the time of entry of A Limited in the office space, right? So B Limited has given a lease incentive of rupees 25,000. So what is the lease incentive? What is the lease incentive? The lease incentive is 25,000. This 25,000 needs to be what? This needs to be deducted from ROU asset, right? ROU asset. Okay. What is the accounting entry? When this when this lease incentive will come, what is the accounting entry? What is the accounting entry for this lease incentive? What is the accounting entry? The accounting entry is bank account debit. Bank account debit, of course, money is coming, so bank account to debit hoga na. So bank account will be debited, but what will be credited? But what will be credited? Whether you will credit your lessor, whether you will credit your lessor, you are not required to refund to the lessor. You are not required to refund any money to the lessor. Will you credit lessor? Will you credit lessor or not? Will you credit lessor? You will credit ROU. Your ROU will gone down by this amount. Your ROU will gone down by this amount, right? What is the accounting entry in this case? What is the accounting entry in this case? In this case, your bank account will be debited and your ROU will be credited. Your ROU will be credited. By this, your bank account will be debited. Bank account. Or I would say, this lease payment, probably the lessor will not give you a cash. Probably the lessor will adjust it from the future lease rental, right? So you will you will the 10,000 which you have paid, you will be adjusted here only minus 25,000, right? So this will be your right of use asset. Alternatively, what could be the entry? Alternatively, what could be the entry? At the same time, you will debit the bank account, right? Debit. and credit the right of use asset. And credit the right of use asset to right of use asset. Okay. You can do anything, whatever you want. You can do anything, whatever you want. Okay. Right. This is your lease incentive. Incentive received from the lessor. Incentive received from the lessor. Right. What is your final right of use asset? Your final right of use asset will come as, it will come as how much? Your right of use asset 1st April 2023 is how much? This equals to 431034 minus 25,000. 406034. I hope this is clear to you guys. I hope this is clear to you guys. Is that clear now? Is that clear now? Yeah. Kirti, is that clear? Jigar, is that clear? Is that clear, friends? Very good. Friends, it's 8:27 now. Let's have a 10 minutes break and we'll start at 8:37. Okay. If you have any question in between, please write your question on the query link of Board of Studies. So after 10 minutes, when I'll resume this session, I will be happy to answer all your queries. These incentives should be deducted from right to use assets. So, Kirti, that's what we have done, right? I have credited right of use asset and debited bank account. Of course, you will get the money, you will debit bank, right? So technically, you have deducted your right of use asset by 25,000. In the first entry, if you see, in the first entry, it is 4,31,054. In the second entry, it is 25,000 credit. Net, it is 4,06,000. That is what we have done. Kusuma is saying, sir, for right to use asset, we need to consider those only, or we are having any other particular need to be considered. So Kusuma, largely these are the component of the right of use asset. If you think what is right of use asset, right of use asset has to be created to the extent of whatever you are paying as a lease payment to the lessor and whatever you are receiving from the lessor. So what you will pay to the lessor, for example, the future lease payment. First of all, you have you guys have understood the meaning of lease payments. Lease payment includes your fixed payment, in substance fixed payment, variable lease payment, plus what? Exercise price, termination penalty, and residual value guarantee. These are the component of lease payment, and these lease payments has to be discounted to the present value, right? So these future lease payment will form part of the right of use asset. So number one is lease payment. Number two is initial direct cost. Number three is asset retirement obligation. Number four, any payments made before the commencement date. So these are the largely four component which has to be performed part of the right of use asset. If there is any lease incentive which is received from the lessor, it has to be deducted. It has to be deducted from ROU. Right? I hope it is clear to all of you, friends. Now we will do some practical question on this right of use asset, right? We discuss this aspect that at the time of initial recognition, right of use asset needs to be created, lease liability needs to be created. So right of use asset needs to be debited, right? Sum of total of below. Credit is lease liability. Lease liability means present value of future lease payment. Present value of future lease payment. Plus, you have to debit your lessor or supplier because you have paid them earlier. So you have put an accounting entry lessor debit to bank. Now you have to credit them. Any lease payment made on or before the commencement date, less lease incentive received. You have to credit bank or creditor for initial direct cost. If you have actually incurred initial direct cost and you have already paid the money, you have to credit bank. But if you have not paid the money, you have to credit the vendor or creditor. Plus provision for dismantling or removing the asset, right? So again, it is a estimate of cost. It is a provision for future dismantling cost, right? It has to be taken at present value, and the provision needs to be created, and right of use asset needs to be debited. This is what we discussed. Now, friends, let's do some question on right of use asset. Oh, and lease liability, right? Yes. Initial measurement of lease liability. Entity L enters into a lease for 10 years. Entity L enters into a lease for 10 years with a single lease payment available, with a single lease payment payable at the beginning of each year. At the beginning of each year. The initial lease payment is rupees 1 lakh. Lease payments will increase by the rate of LIBOR each year. At the date of commencement of the lease, LIBOR is 2%. At the date of commencement of the lease, LIBOR is 2%, right? So entity L enters into a lease for 10 years, right? So what is my lease term? Lease term in this case is 10 years with a single lease payment payable at the beginning of each year. Friends, please write down at one place. And this is a very, very, very important aspect in your exam, where people get, where people, where students make a mistake. So I'm asking a simple question. Let's say if I'm paying a rent in advance, or I would say if I'm paying a rent in the beginning, for example, if I'm paying a rent of rupees 1 lakh as of today, right, in the beginning of the year. So what is the present value of 1 lakh rupees which is payable today? What is the present value of 1 lakh rupees which is payable today? What is the present value of this 1 lakh today, which I'm paying today? What is the present value? The present value is 1 lakh rupees only. The present value factor is 1 only, right? But if I'll say that I'll pay this lease rent at the end of the year, at the end of the first year, for example. In that case, what is the present value of this 1 lakh rupees today, which I'm going to pay after 1 year? I'm going to pay at the end of the year. I'm going to pay at the end of the year. What is the present value today? Considering a discount rate of 10%, the present value is factor is 0.909. The present value is 90,909 rupees, probably. The present value is 90,909 rupees, right? Considering a discount rate of 10%. So first of all, while reading any question on Ind AS 116, please look at the timing of the rental payments, timing of the lease payments. In this question, it says that with a single lease payment payable at the beginning of each year, right? It means for the first year, the rent has to be paid on the commencement date. It means for the first year, there should not be any present value. For the first year, the actual value is the present value. For the second year onwards, of course, sitting today, the present value accounting will start. The initial lease payment is 1 lakh rupees. Lease payment will increase by the rate of LIBOR each year. This is a variable escalation, but it is depending on an index, which is LIBOR, London Interbank Offer Rate. At the date of commencement of the lease, LIBOR is 2%. At the date of commencement of the lease, LIBOR is 2%. Assume that the interest rate implicit in the lease is 5%. How lease liability is initially measured? So you need to tell me the right of use asset and lease liability. Okay. So friends, in this case, this escalation is this variable lease payment is on the basis of an index, and hence it will be your fixed future lease. It will form part of your future lease payments, right? So I am taking you to the Excel file, and let me solve this question. I hope this Excel file is visible to all of you. I hope it is visible to all of you guys. Is it visible to all of you? Yeah. So I'm solving this illustration. Illustration number 27 from ICAI study material, right? What is given in the question? In the question, it is given that if I'll see, it's given that the lease term is for how many years? The lease term is 10 years, right? Which is given in the question. The lease term is 10 years, and the annual lease payment is at the beginning of every year, right? Lease term is 10 years. Annual lease payment is at the beginning of every year. right? And what is the starting payment? So what is the initial payment? Initial annual payment is 1 lakh, increased by 2% of LIBOR every year. Increased by 2% of LIBOR every year. This is what is given in the question. This is what it is given in the question, right? First of all, let me put the years here. Let me put the things here. Year. How many year are there? 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. Plus this, right? These are the years. Okay. Then your lease payment. Okay. What is your lease payment? Your lease payment, which is given in the question, in the first year, it is 1 lakh rupees. It is 1 lakh rupees. It will be increased by 2%. Can I write it as 102% of last payment? Can I write this as 102% of the last payment? Yeah. It is given in the question. Again, 2% escalation, again 102%. So likewise, these are the payment by the end of every year. These are the payments, right? Okay. Now in this question, interest rate implicit in the lease is also given, right? So the discount rate is given in the question 5%. Discount rate is 5%. So what is my present value factor at the rate of 5%? What is my present value factor at the rate of 5%? Present value factor at the rate of 5%. What is the present value factor at the rate of 5%? For first year, what is the present value factor for first year? The payment is at the beginning of the first year. What is the present value factor for the first year? What is the present value factor for the first year? It is one only. It is one only. What is the present value? This multiply by present value factor. What is the present value factor for the second year? The rent has to be paid in the beginning of the second year. So present value factor should be 1 divided by 1.05, right? 1 divided by 1.05. It comes at 0.952. It comes like 0.952, right? The third year present value factor is the third year, same, divided by 1.05. Likewise, this will be the present value factor. Likewise, this will be the present value for every year payment. Simple. What is the total? What is the total of these payments? What is the total? The total is how much? 880751. The total is 880751 total. 880751, right? Is this clear? 880751. I hope it is clear. What is my accounting entry at the commencement date? What is my accounting entry at the commencement date? What is the accounting entry at the commencement date? At the commencement date, beginning of the first year, the accounting entry will be right of use asset account debit. Right of use asset account debit to Lease liability, right? And what is the amount? 880751. What is the amount? 880751. I hope it is clear. 880751, right? What is my asset? What is my asset? My asset is 880751. What is my liability side? My liability side is again 880751. 880751. Right, friends? How this asset, right of use asset, how this asset will be knocked off, how this asset will complete, how this asset will be crystallized, because it's a right of use asset. It's a right of use asset. How this asset will be completed. This asset, every year, this right of use asset will be depreciated. This right of use asset will be depreciated on a straight line basis. This right of use asset will be depreciated on straight line basis, right? So for example, there are 10 years. So at the end of every year, there's an accounting entry depreciation to accumulated depreciation, right? Depreciation. So every year, what is the depreciation? This 880751 of asset has to be depreciated. Divide by 10. Every year there is a same depreciation of 88,075 rupees 11 paisa. Right? This is the same depreciation which will be there for every year. This is the depreciation. What about lease liability? By this, your right of use asset carrying value will be reduced, right? At the end of the 10th year, your right of use asset will become zero. Clear? What is the accounting entry? Depreciation account debit. Account debit to accumulated depreciation. To accumulated depreciation. So the net block will become zero at the end of the 10th year by this amount every year. Okay. Clear? How this lease liability will become zero at the end of the lease term. Let me also make a lease liability schedule so that you will be able to understand end to end. Lease liability schedule, right? That what happened with the lease liability. The asset, it is very simple. On the commencement date, 8,80,751 asset has been created, recognized. Now this asset has to be depreciated over the lease term. Very simple. Now what about the lease liability? So again, I am putting this 10 years and I'm drawing a lease liability schedule for entire 10 years. Entire 10 years, right? Year. Opening balance. Opening balance. What is my opening balance of lease liability on the commencement date? 880751. Interest cost. Right? Interest cost. Then lease payment. In this case, the payment is happening at the beginning. So lease payment will come first, lease payment, then interest cost, and then your closing balance, right? Interest cost at the rate of 5%. Interest cost at the rate of 5%. Is that clear? Interest cost at the rate of 5%. 5%. Now, what is my lease payment every year? My lease payment in the first year is 1 lakh, right? What is my interest cost? What will be my interest cost? Please tell me. What is my interest cost? Please tell me what is my interest cost? Of course, my opening liability was 887.51. I have paid 1 lakh rupees. Multiply by 5%. This is my interest cost. What is my closing balance? Opening liability plus lease payment. I mean to say minus lease payment plus interest cost. This is my closing balance. This is my closing balance in the first year. Friends, do let me know if you have any issue, if you have any concern, or if you want me to explain anything, do let me know. Guys, please let me know if you have any questions so far. Right of use asset to lease liability is clear. Present value of future lease payment is clear to all of you. Now this right of asset, use asset has to be depreciated over the lease term is clear to all of you. Now I am drawing my lease liability schedule, right? My opening lease liability, my opening lease liability is 887.51. But in the 10 year, how much I'll pay if I'll total this total lease payment for 10 year? In the 10 year, I'll pay 10,94,972. So what is the difference between 1094 and 887.51? मेरी लाइबिलिटी आज मैं 880 पे रिकॉग्नाइज कर रहा हूं जबकि मैं पेमेंट 10,94,000 की करूंगा. तो ये जो डिफरेंस है, ये डिफरेंस क्या है? दिस डिफरेंस इज नथिंग, इट्स इंटरेस्ट which has to be charged over a period of 10 years, right? Right? Clear. Now, in the beginning of second year, the closing of first year will become the opening balance for the second year. How much amount I'll pay? I'll pay the second year lease rental, which is not 1 lakh, which is 1 lakh 2,000, right? Again, I will pay the interest cost. I will recognize the interest cost. Then there is a closing balance. This will become my opening balance. This third year payment I'll take from the schedule, right? So if I will just extrapolate this calculation to the 10 year, you can find that in the end of the 10th year, at the end of the 10th year, there is no interest cost and there is no closing balance. Why? Because the payment is happening at the beginning of the year. So in the beginning of the 10th year, whatever payment is there, that has been paid, right? So 10th year के beginning में ही payment हो गई. तो 10th year में कोई interest cost भी नहीं होगा क्योंकि opening balance बचा ही नहीं balance. ओपनिंग बैलेंस 1/19 का था और 1/19 की पेमेंट हो गई. सो देयर इज नो इंटरेस्ट कॉस्ट इन द 10th ईयर, देयर इज नो क्लोजिंग बैलेंस इन द 10th ईयर. In the 10th year, your lease liability has become zero, and in the 10th year, your ROU asset has also become zero by getting the depreciation. I hope this illustration number 27 is clear to all of you, friends. Illustration number 27 is clear to all of you. Yeah. That how I have calculated right of use asset, lease liability, what accounting entry I have passed, how I have amortized this right of use asset, how I have, created interest cost. And you can see the difference between the lease payment. So this is my total lease payment. This is my total interest cost, right? If I'll take a difference with this plus my opening liability, it is nothing. It is equal to the interest cost, 214,221. That's all. Right? So illustration number 27 we have covered. Now let's go back to illustration number 28, measuring right of use asset. Entity Y and entity Z. Entity Y and entity Z execute a 12-year lease of a rail car with the following terms on 1st January 2016. Commencement date is, it is an inception date where the terms were agreed. Commencement date is 1st February. It is given in the question. So lease inception date is 1st January. Lease commencement date is 1st February. Lease term is 12 years. Underlying asset is rail car. Entity Y, entity Y is a lessee, entity Z is a lessor. Entity Y must pay entity Z the first monthly rental payment of rupees 10,000 upon execution of the lease, right? So when this lease agreement entered, when this lease agreement concluded, so entity Y has to pay a first month rental of rupees 10,000. It is an advance rent. One of the student was asking a question relating to the advance rent, and he was asking, sir, Anish was asking that question, sir, for advance rent payment journal entry, instead of debiting lessor account, can we debit advance rent also? Yes, Anish, you can debit advance rent also, right? At that point of time, you can debit advance rent. Then after making a right of use asset entry, you have to credit that advance rent, right? So whatever you have debited, you have to credit that. You have to be very proactive in answering this question. Now you guys have become the champion about this concept. Entity Y must pay entity Z the first monthly rental of rupees 10,000 upon execution of the lease. Entity Z will pay. Now the lessor is paying to the lessee, means incentive. 50,000 rupees cash incentive to enter into lease payable upon lease execution. So now this lessor is paying 50,000 rupees to the lessee for entering into the lease, right? And I have told you the reason for that. Entity Y incurred. So entity Y, lessee has paid 10,000 rupees. Lessor is paying to the lessee 50,000 rupees. And again, lessee has incurred 1,000 rupees of initial direct cost, right? Which is payable on the commencement date. Entity Y calculated the initial lease liability as the present value of the future lease payment, discounted using its incremental borrowing rate, because the rate implicit in the lease could not be readily determined. The initial lease liability is 8,50,000. And in the question, the future lease payment, the discounted value, the present value of future lease payment is also given in the question, right? So four facts are given in the question. Number one, present value of future lease rentals is given in the question, which is 8,50,000 is your lease liability. Number two, advance rent of rupees 10,000 is given in the question. Number three, lease incentive of 50,000 is given in the question. Number four, initial direct cost of 1,000 is given in the question. Now you need to tell me quickly, what is the debit in ROU asset? What is the value of right of use asset? You need to tell me quickly. It's a very simple question. Now it become very simple because we have covered two examples, two questions on this. Can you tell me quickly what is the value of the right of use asset? And I am giving you 30 seconds. I am giving you 30 seconds. I briefly, and I would say I have explained this concept in detail, explained the question in detail as well. Kusuma has told 8,11,000. What about others? I am waiting for the answer by others. Neha has also said 8,11,000. Shruti, Abdul, and Salesh all are saying 8,11,000. So how it come as a 8,11,000? Let's discuss this question. 8,50,000 is your lease payment, present value of future lease payment. 8,50,000 is lease liability, right? Plus 10,000 is your advance rent. 850 plus 10, 860. Minus 50,000 is lease incentive. So 8,10,000. Plus 1,000 plus 1,000 is initial direct cost. So the total comes out at 8,11,000. So 7 students have answered the right answer to this question. 8,11,000 is the right answer. Great, guys. Great. Right? It means you guys have well understood the concept of this lease, this right of use asset and lease liability. Right? I hope it is clear to all of you, friends. I hope it is clear to all of you. Is that clear to all of you, or it is not clear to all of you? Is that clear? Okay. Now, friends, let's say we understood the initial recognition. You have to debit right of use asset. You have to credit lease liability. What about subsequent measurement? Like in PP, you guys were capitalizing the property, plant, and equipment, and you guys are crediting, right? You guys are crediting the bank, vendor, whatever. And at the end of every year, you were depreciating that PP. You were recognizing the impairment on the PP, right? You were doing all those stuff. Even for subsequent measurement, Ind AS 116 says that you need to recognize your right of use asset either on a cost model or on a revaluation model. Either on a cost model or on a revaluation model. I am talking about subsequent measurement of the PPE, subsequent measurement of Ind AS 116. Subsequent measurement of right of use asset I am talking about. Shruti, can you tell me what was the subsequent measurement model in case of Ind AS 16 property, plant, and equipment? Cost model and revaluation model. Cost model and revaluation model, right? Cost model and revaluation model. What is the cost model? In the cost model, the asset has to be measured at cost, continued at cost, and asset needs to be depreciated at the end of every reporting period, right? The depreciation needs to be charged, and impairment loss is also required to be evaluated, right? So the carrying value under cost model is equal to cost minus accumulated depreciation minus accumulated impairment losses. I think this example, this formula is clear to all of you because you guys have covered Ind AS 16 property, plant, and equipment, Ind AS 38 intangible asset, Ind AS 40 investment property, and even I have taught you these three standards, right? So cost model means simple. You have to deduct accumulated depreciation, accumulated impairment losses from the cost. As simple as that. Yeah. Revaluation model means you have to revalue your right of use asset. You have to revalue your right of use asset, right? You have to revalue your right of use asset. Now the question arises, sir, in AS 116 I have understood the recognition of right of use asset lease liability तो हमें समझ में आ गया, we have understood. In case of subsequent measurement, how will we apply the concept of depreciation? How will we apply the concept of revaluation? How will we apply the concept of impairment? So in Ind AS 116 says that in case of subsequent measurement, for right of use asset, for depreciation impairment, please refer the concept which is given in Ind AS 16. So friends, you remember when I was taking a session on Ind AS 38 intangible asset, I have told you guys that when you read some standard, probably you are doing some revision of the earlier standard as well. Like when you read Ind AS 38, you must be doing a revision of Ind AS 16. In 30-40% you will be doing revision of Ind AS 16. When you read Ind AS 40, you will be doing a revision of Ind AS 16. Right? Likewise, when you read Ind AS 116, particularly in this aspect of subsequent measurement, you will be doing a revision of Ind AS 16 property, plant, and equipment. Standard says that in case of right of use asset, at the reporting date, you have to charge depreciation, and you have to evaluate the impairment also for right of use asset, right? If there is any rental which is increasing or decreasing, you have to remeasure the lease liability also. You have to remeasure the lease liability also, and the remeasurement of lease liability will have an impact on right of use asset also. आप रिपोर्टिंग डेट पे क्या करोगे? एक एसेट है, आप उस एसेट पे डेप्रीसिएशन चार्ज करोगे, उस एसेट को चेक करोगे कि मेरे को उसको इंपेयर करना है या नहीं करना है. सर, हाउ कैन वी इंपेयर राइट ऑफ यूज एसेट? फॉर एग्जांपल, I have entered into a lease agreement for an office premises. The non-cancelable lease is 5 years. The yearly rental is 1 lakh rupees. The total rental is 5 lakh rupees. On the commencement date, what I'll do? On the commencement date, I'll recognize right of use asset to present value of future lease liability. Right? Let's say it comes out to 3 lakh rupees. I was doing my business and my business was great. So 3 lakh rupees right of use asset I have created, and I am charging depreciation of 60,000 every year for my right of use asset. In the first year, I have charged 60,000 rupees of depreciation. In the second year, I have charged 60,000 rupees of depreciation. So after 2 years, COVID came and my business was badly impacted, severely impacted. Now I have to shut down my office. But since this lease term was non-cancelable lease term, even though if I'll exit today, I have to pay a lease rental of remaining 3 years to the lessor. So I decided to occupy the space. I decided to occupy the space for the next 3 years as well. But friends, do you think the asset, right of use asset, which I have created of 3 lakh rupees in the beginning, and the net block is 3 lakh minus 60 minus 60. So 1 lakh 80,000 of net block is sitting in my balance sheet. Do you think I will be able to recognize, I will be able to recover any future economic benefit from this right of use asset? Since I have shut down my office, I am only occupying the space. Why? Because in any case, I have to pay the lease rental for the next 3 years. Do you find any benefit which is going to be recovered from this right of use asset? Answer is no. You are occupying the space, but you are not able to use the space. Why? Because your business is not there. So in this case, the impairment triggers, and you have to recognize the impairment loss. You have to recognize the impairment loss. Okay. So this is your cost less accumulated depreciation, less accumulated impairment losses. Okay. Have you understood that how this impairment comes into the picture in case of right of use asset? Because people are thinking, sir, प्रॉपर्टी का एसेट का पीपी इंटेंजिबल एसेट का तो इंपेयरमेंट समझ में आता है, बट इस राइट ऑफ यूज का इंपेयरमेंट कैसे करें? अगेन you have to do the impairment in that manner, right? You have to do the impairment in that. Is it clear? Are you able to connect with this real life situation? Are you able to connect? Because although you are paying lease rental and you are recognizing right of use asset, but it is directly related with the underlying asset prices. How come it is directly related with the price of underlying asset? Let me tell you what happened. And I am giving a real life scenario in Gurgaon. When COVID came, the prices of the property went down. The prices of the property went down when COVID came, right? You all agree? And even the rental has also gone down. The rental prices has also gone down. After 6 months or 1 year of the COVID, after 6 months or 1 year from the COVID, what happened? The property prices have rises. The property prices have shoot up like anything. In Gurgaon, the property prices have been doubled in the last 2 years. And even the rental value has also increased like anything. So when the property prices are increasing, the rental value is also increasing. And you are recognizing right of use asset on the basis of rental value, right? So friends, if you have to do the revaluation of right of use asset, if you have to do the impairment testing of right of use asset, you can do that because it is directly related to the prices of the underlying asset or demand and supply of the underlying asset also, right? So it is doable. It is doable. Okay. Now, cutting the long story short, right of use asset which you have created, you have to depreciate. You have to check the impairment testing as well. You have to check the impairment also. You have to depreciate. Sir, how can we depreciate? How should we depreciate? You have to depreciate as per Ind AS 16. on the basis of straight line method, right? Now, what will be the period of the depreciation? Standard says that if the lease contract is having a right to purchase option, for example, standard says that the depreciation period is equal to lease term. But what happens if the lease term is having a right to purchase option? Let's say, let's say the life of the car is 15 years. Please listen this example very carefully. It will always be there in your mind. If you buy a petrol car, the life of the car is 15 years, 15 saal. Instead of buying a car, you have taken a car on a lease basis, okay, for a period of 10 years. You are paying a lease rental for a period of 10 years. Now, on the commencement date, you are recognizing right of use as a debit to lease liability credit on the basis of present value of future lease rental. Okay. Now you came on the end of the reporting date, that is end of the first year. Now you have to depreciate. How you will depreciate? You will depreciate the right of use asset divided by the lease term, which is 10 year on a straight line basis. As simple as that. Now I'm tweaking this question, right? So in this case, the life was 15 year, lease term was 10 year, but you have depreciated for 10 year. Now what happened? In the second example, the life of the car is 15 year. I got a car on a lease basis for 10 year, and in the lease contract, I have a right to purchase option. I have a right to purchase option, right? And I'm reasonably certain that I'll purchase that. You remember when I was discussing the lease payment, one of the component is exercise price of the purchase option. You remember that? Kusuma has told that there are 5 component of lease payment from lessee perspective and 6 component from lessor perspective. And one of the component is exercise price of a purchase option. So when you will consider that exercise price of the purchase option, when you are reasonably certain that you will avail the purchase option, right? So if there is an exercise price of a purchase, if there is a purchase option and you are reasonably certain that you will avail that purchase option, so it means 10 year is the lease term, but after 10 year you will have a purchase option and you will avail that. So you will have this car not for 10 years but even for 15 year. आपके पास ये कार 15 साल रहेगी, 15 year रहेगी. So standard says that in that case, if the lessee intends to purchase it, right? In that case, you have to depreciate the asset over the useful life of the asset. So what is my depreciation period? My depreciation period is useful life of the asset, right? If the purchase option is there. If the purchase option is not there, in that case, useful life or period of use, useful life or lease term, whichever is earlier, or I can say that over the period of lease term, as simple as that. अगर परचेज ऑप्शन नहीं है तो आप लीज टर्म में डेप्रिशिएट कर दोगे, अगर परचेज ऑप्शन है तो यूजफुल लाइफ में डेप्रिशिएट करोगे. दैट इज द ओनली थिंग विच इज गिवन इन द स्टैंडर्ड. व्हाट अबाउट लीज लायबिलिटी? In case of a lease liability, as I told you, the lease liability will increase by finance cost, by interest cost, right? Because you have discounted, now you have to unwind the discount. The difference between the present value of the future lease payment and the total lease payment is nothing. It's a discounting factor, which is interest cost, right? And this lease liability is decreased by actual lease payments. Okay, friends? So friends, we discussed this part, that lessee recognizing the following item in expense for leases: depreciation on ROU asset, interest expense on lease liability, the variable lease payment which is not depending on the index or rate, that the lessee has to recognize in P&L, impairment of the ROU asset, that lessee has to be recognized in the P&L. This is what we have discussed already. Now we will discuss this illustration number 30 to revise, to rehearse, or to make our understanding more robust. Let's discuss illustration number 30 as well. Entity ABC, lessee, enters into a 3-year lease of equipment entity ABC, lessee, enters into a 3-year lease of equipment. Okay. What is the lease period? 3 years. Entity ABC agrees to make the following annual payment at the end of each year. In the study material, this end is bold and underlined, but in your examination, nothing is bold and nothing is underlined. You have to see whether it is a beginning of the year or it is the end of the year. It makes a huge difference, right? And let me tell you, the mindset is end of the year. And if the paper is complex, it will always give you beginning of the year. When this Ind AS 116 came, right, in the first year or in the second year, I'm not able to remember exactly. So in one of the attempt, the question which came, the rental payment was beginning of the year. 60% of the student has solved the question considering it is end of the year. 60% of the students made a mistake, right? So what they have done, even they have discounted the first annual payment, which should not be discounted because the payment is happening on the commencement date itself. So the present value is equal to the actual value, right? 60% of the student made a mistake because in your subconscious mind, you are reading like end of the year. In your subconscious mind, when you create a right of use asset schedule, when you create a present value schedule, you are putting on the left side year 1, 2, 3, 4, 5, lease payment, this, present value factor 10%, 5%, whatever. So you are starting from the day, from the year one, you are just started, calculating the discount factor. Okay. So please be careful while reading Ind AS 116 leases question. Please be careful whether the question is talking about end of the year or beginning of the year, right? Right, guys? Are you agree with me or you don't agree with me? Because you agree with me or you don't agree with me? Are you able to understand the difference between beginning of the year and end of the year? Are you able to understand the difference or not? Or should I explain it again? Yeah? Viraj, Kirti, Salesh, Rahul, Ridhima, all are saying agree. Okay. So it means you have understood that thing. Right. So let's discuss further. 3 year is the lease term, and this payment is happening annually at the end of each year. First year 20,000, 30,000 in the second year, 50,000 in the third year, 20, 30, 50. The lease payment is given. For simplicity purposes, there are no other element to the lease payment like purchase option, lease incentive, lessor from the lessor or initial direct cost. There is no other item, right? No other element to the lease payments. Assume a discount rate of 12%, which is entity ABC, which is lessee's incremental borrowing rate, because the interest rate implicit in the lease cannot be readily determined. Okay. So normally, even in industry, what happened? The discount rate is related to the lessee's incremental borrowing rate only. The discount rate is not interest rate implicit in the lease. Because why lessor will tell you that how much I have inbuilt the interest rate in my calculation. The lessor will not tell you, right? It is not part of your lease contract. So entity ABC depreciate the right of use asset on a straight line basis over the lease term. How would entity ABC would account for the said leases under Ind AS 116, right? So let me again give you initial recognition and measurement and subsequent recognition and measurement, right? So let me explain this. I am taking you on an Excel file, and please confirm if the Excel file is visible. Please confirm once Excel file is visible. This was my illustration number 30. This was my illustration number 30 of study material, right? I think this illustration is very simple. So instead of doing this, so let me take this illustration number 30 on the slides only, and I'll solve illustration number 31. Okay, that is little complex illustration. In this illustration, we have understood 3 year is the lease term. Payment is happening at the end of the year. 12% is the discount rate. So let's calculate the right of use asset and lease liability. How will I calculate this? First year 20,000, second year 30,000, third year 50,000. This is my discounting factor. This is the total payment is 1 lakh. The present value is 77,364, right? So what is the first entry? Right of use asset account debit to lease liability 77,364. Now this lease liability schedule, you have to make opening balance 77,364. Interest has to be charged at the rate of 12%. Since payment is happening at the end of the year, so 20,000 payment has been made. Closing balance is this one. This is the opening balance. This is the interest expense. This is your lease payment. This is your closing balance. Again, this is your interest cost. This is your lease payment. And at the end of the third year, your lease liability will become zero. Very simple. What happens with the ROU asset? So this ROU asset of 77,364 divided by 3. Every year, this is your depreciation. At the end of the third year, this ROU becomes zero. Right? First entry ROU to lease liability. Second entry interest expense to lease liability. Depreciation to ROU expense. Payment of rent is lease liability to bank. These are the 4 entry which you have to make for this case, right? Lease liability to cash or bank. And this is the entire summary. You have to pay a lease payment of 20,000, 30,000 and 50,000. This is your expense, interest expense, depreciation expense. This is your total expense. This is your balance sheet, right of use asset and lease liability, right? Clear? Now friends, let's solve the illustration number 31, right? This is little complex illustration. I hope this illustration number 30 was clear to everyone. Any doubt on illustration number 31? 30. Any doubt on illustration number 30? It was a very simple illustration. Let's solve illustration number 31. Company EFG enters into a property lease with entity H. Company EFG enters into a property lease with entity H. Okay. Initial term of the lease was 10 year with a 5-year renewal option. The lease term was 10 year, but the renewal option was there, which was 5 year. The economic life of the property is 40 year. The life is too much. It is 40 years, but the lease term is 10 year with renewal option of 5 year. And the fair value of the leased property is rupees 50 lakhs, right? So fair value of the leased property is 50 lakh rupees. Company EFG, who is the lessee, has an option to purchase the property at the end of the lease term for rupees 30 lakhs. Right. So friends, this lessee has an option to purchase the property at the end of the lease term for rupees 30 lakhs. After 10 years, the lessee has an option to purchase the property. The total life is 40 years. Economic life is 40 years. Initial lease term is 10 years. And the lessee has an option to buy this property at 30 lakh. The first annual payment is rupees 5 lakh with an increase of 3% every year thereafter. The first annual payment is 5 lakh and every year there is an escalation of 3%. So in substance, fixed payment is 3% escalation every year. The implicit rate of interest is 9.04%. Discount rate is given, which is 9.04%. The lessor, entity H, gives company EFG, lessee, an incentive of rupees 2 lakh payable at the beginning of year 2. This incentive is not payable on the commencement date. This incentive is payable at the beginning of year 2 and the value of the incentive is 2 years, which is to be used for normal tenant improvement. So it means on the commencement date, after 2 years, an amount of 2 lakh has to be received from the lessor. Company EFG is reasonably certain to exercise that purchase option. The life was 40 year, 10 year is the lease term. After 10 year, this lessee can buy the property, purchase the property at 30 lakh rupees, and lessee is reasonably certain because he is getting a property at 30 lakh rupees and still the remaining life would be 30 years and the value of the property will always move ahead. It will always go up in all normal scenario. How would EFG measure the right of use asset and lease liability over the lease term? How would this company measure the right of use asset and lease liability over the lease term? I hope you guys have understood this question, right? So let me summarize this question and let me take you guys on the Excel file where I'll write the facts of this question. Okay. I hope my Excel file is visible to all of you. I hope this Excel file is visible to all of you. Haradhan is asking, sir, how interest calculated in illustration number 30? So interest is nothing. It's a unwinding of discount. So for example, it was 12% in that case. So you have discounted on 12%. So you will also charge interest at the rate of 12%, right? So you will be able to understand the concept of interest also in this particular example. Okay. Let me solve illustration number 31. Please focus on illustration number 31 and see step by step that how I am solving this illustration number 31. And I will solve this illustration like a student, not like a teacher, like a student. Okay. I hope this Excel file is visible to all of you. Is it visible? Okay. Let me solve this illustration. Illustration number 31 of ICAI study material. What are the facts which is given in this illustration? In this illustration, the facts which are given is lease term. How much lease term was there? 10 years. Sorry, 10 years lease term is given. Purchase option is given in the question. Whether purchase option is given? Yes. Purchase option is given. Yes. And lessee is reasonably certain to avail the purchase option. Lessee is reasonably certain to avail the purchase option, right? Exercise price is given in the question. Exercise price. How much? 30 lakh at the end of 10th year. 30 lakh at the end of 10th year, right? Is that clear? 30 lakh at the end of 10th year. I hope it is clear to all of you. Yes or no? Is that clear to all of you? Yeah, this is what is given in the question. What else is given in the question? Lease payment is given, which is 5 lakh increased by 3% every year. What is the lease payment? 5 lakh increase by how much? 3% every year. Lease incentive is also given in the question. Lease incentive. This is 2 lakh payable means not payable, receivable at the end of year 2. It is end of or beginning of. Just let me read that question. The lease incentive company H will give company EFG payable at the beginning of year 2. Sorry, it is not at the end, it is at the beginning. 2 lakh receivable at the beginning of year 2. Year 2. What else is given in the question? Discount rate is given in the question. Discount rate. 9.04%. Discount rate is 9.04%. Right? Discount rate is 9.04%. Okay. Now, what happened? What else is given in the question? In the question, it is given that the first annual payment is 5 lakh with an increase of 3% every year. Thereafter, in the question is whether it is given, whether the payment will happen at the beginning or at the end. Is it given? Initial term is 10 year, economic life is this one, company EFJ an option to purchase the property. At the end of the lease term, first annual payment is 5 lakh. Company H gives an incentive of 2 lakh payable at the beginning of year 2, which is used for normal tenant improvement. Company EFG is reasonably certain. How would EFG measure the right of use asset and lease liability? Right? So that is not given in the question, that it is beginning or it is at the end of the year. It is beginning or it is at the end of the year. Is that given in the question? Is that given in the question? Friends, so let's read this question again. What this question is saying: company EFG enters into a property lease with entity H. Initial term of the lease is 10 year with a 5-year renewal option. Economic life of the property is 40 years. And the fair value of the lease property is 50 lakh. Company EFG has an option to purchase the property at the end of the lease term. First annual payment is 5 lakh with an increase of 3% every year thereafter. First annual payment. Implicit rate of interest is 9.04%. Entity H gives company EFG an incentive of rupees 2 lakh payable at the beginning of year 2, which is used for normal tenant improvement. Company EFG is reasonably certain to exercise that purchase option. It is reasonably certain to exercise that purchase option. Right. What is the lease liability and right of use asset in this particular case? In this particular case, nowhere it is given that whether the lease payment has to happen at the beginning of the year or at the end of the year. Right. In this case, only one hint which is given. It says that the lease incentive has to be payable at the beginning of year 2. The lease incentive has to be payable at the beginning of year 2. So what does it mean? If the lease incentive has to be given at the beginning of year 2, what does it mean? It means that the payments, the lease payments are also happening at the beginning of year 2. The lease payments are also happening at the beginning of year 2. Sorry, the lease payments are also happening at the beginning of the year, right? So you have to take the inference from the question that in one of the place it is written that the lease incentive is payable at the beginning of year 2. It means the lease payments are also happening at the beginning. It is also happening at the beginning of the year. Sir, why you have considered this fact? Normally, friends, what happened? The lease incentive which is given by the lessor never pays in cash. The lessor will adjust from the lease payment, right? So that is why in this question, you have to consider that this payment is also happening. This payment is also happening on a beginning of the year, right? And you can write this fact as a fact in the question, as a fact while solving, right? So Kirti is asking, sir, we have to give any note in exam regarding not considering renewal option in lease term. So Kirti, not required. Why? Because at the end of 10 year, the exercise option is there, the purchase option is there, and it is given in the question that the lessee wants to avail the this purchase option, right? So it means after 10 year, lessee will purchase this asset and lessee will not extend the lease term. Okay. Yes. Now let's go back to the uh, Excel file and let's discuss this. Let's solve this question, right? Just a minute. I think there is a problem in the Excel file. This Excel file is visible. Excel file is visible to all of. So let me close this Excel file and then open this Excel file. Just allow me a minute. I'm just stopping this Excel file and then I'll open this Excel file. There is some problem in my Excel file. Just give me a minute, friends. Yes. Please confirm if the Excel file is visible now. Please confirm if the Excel file is visible. Yes. Right. Solution. Now we will solve this question. Solution. In the question, it is given that the lease incentive is payable by the lessor at the beginning of year 2. We will assume that the lease payments are also happening at the beginning of every year, right? Now I'll put year here, year. I'll put lease payment. I'll put present value factor at the rate of 9.04%. I'll put present value, right? PV. So okay. How many years are there? 1, 2. So let's put the year till 10th year. Now, what is my lease payment? My lease payment is 5 lakh rupees. My lease payment is 5 lakh rupees, right? At the beginning of the first year. Now, every year, this lease payment will increase by 3%. So this multiply by 103%, right? So likewise, every year, this lease payment will go up. This lease payment will go up every year, right? This lease payment will go up every year. Is that clear? Is that clear? Yeah. I hope it is clear to all of you. This lease payment will go up every year. I hope it is clear to all of you, right? So what is my present value factor in the year one? In the year one, this present value factor will be 1 only. Why? Because it is at the beginning of the year. What is my present value factor at the in the second year? In the second year, my present value factor will be 1 divided by 1.904. Sorry, not 1.904. 1 divided by, I would say, 0.90. Sorry. It is 1 divided by 1.1 divided by, if it is a 10%, I am doing 1.1. If it is a 9.04%, I'll do 1.904, right? I think I am making some mistake. 1 divided by 1.0904, right? Yes. 1.0904. Okay. What is a 9.04%? So how I have calculated? Simple. 9.04% means you have to put, if you have to convert this percent into the number, it will come out 0.0904, right? So that's what I have done. 1 divided by 1.0904. I have added just 1 here. 1 divided by 1.0904. Let's say if it is a 10%, what is meaning of 10%? 0.1, right? And that is why for 10% we are doing 1.1. So 9.04%, we will do 1.0904. Okay. I hope you have understood that how you have to compute this present value factor. Again, this divided by 1.0904. Okay. This is how you will compute your present value factor. This is how you will compute your present value factor. Any doubts so far? Any doubts? I have just put my lease payments and I have also put my present value factor. Right? Friends, I have put all the lease payments here and I have done the escalation of 3% every year. 3% every year. Right? Now, what happened in the question? It is given that the lease incentive which is given by the lessor to the lessee at the beginning of year 2, don't you think that first lessee will pay 5,15,000, he will return 2 lakh rupees. So it means net the lessee will pay. How much lessee will pay? The lessee will pay how much? The lessee will pay 3,15,000 rupees, right? But these future lease rental are always on the basis of this 5 lakh only. This escalation is there on the basis of 5 lakh only. So what I'll do, instead of C17, I'll write 5,15,000 here. And here, what I'll do, it is this minus 2 lakh rupees of lease incentive, right? So the second year payment is nothing, it's become 3,15,000. The second year payment is 3,15,000. Okay. When I'll multiply this, I'll get my present value of future lease rental. I'll get my present value of future lease rentals, future lease payments. Okay. I'll get my present value of future lease payments. It is coming out at 37,636. So friends, what I have done, I have taken care of this 10-year lease term. I have just done this treatment of lease payment, lease incentive, and discount rate. These 3 aspects I have covered. This aspect I have covered. These 2 aspects still I have not covered. Purchase option and 30 lakh at the end of the 10th year. Friends, what is the formula for lease payment? Lease payment is equal to fixed payment plus in substance fixed payment plus variable payment plus exercise price in case of a purchase option. At the end of the 10th year, at the end of 10th year, You are required to pay 30 lakh rupees. You are required to pay 30 lakh rupees. Right? You are required to pay 30 lakh rupees as the exercise price of the purchase option. What is the discount rate at the end of the 10th year? 0.459. What is the present value of 30 lakh as on today? 13 lakh 76,730. This is, sorry, there is one gap. These discount rate are for the beginning of the year, and this lease payment is at end of the 10th year. End of the 10th year. These all are beginning. These all are the beginning of first year, beginning of the second year. These all are beginning, and this 10th year is end. It means in the opening and closing, there is a difference of 1 year, right? So again, I need to compute the discount rate of 10th year closing, or I can say that 11th year beginning, divide by 1.0904. Right. So this is coming out at 12,62,591. So what is my total present value of the lease payment? What is my total? What is my present value of total lease payment? This plus this. See, it is 50 lakh rupees only. You can round it off in 50 lakh rupees. In ICAI study material, they have rounded off over 50 lakh rupees, right? Even you want to round off, you can do that. Otherwise, you can continue with 50 lakh 2,228 rupees also. Friends, do you have any question that how I have solved this question, how I have computed the right of use asset, how I have computed my lease liability, right? So, do you have any question, any doubt here? Do you have any question, any doubt here? Yeah. Do you have any doubt here? Rajesh is asking, sir, will it be wrong to infer that annual lease payment are at year end and incentive is paid after first year term is honored? No, it will not be wrong. But the point is, what would be the best option? What would be the best option, right? In examination, you have to be go by the general perspective as well. Like in your ICAI study material, the question has been solved considering that the payment is also in the beginning of the year, right? Is that clear? Yeah. Now, friends, what are the accounting entries in the beginning of the year? And the question is also talking about the depreciation and the other aspect. Okay. The question was also talking about depreciation and the other stuff as well. So let's solve the question further. Let's solve the question further. Okay. What the question was talking about? The question was talking about, so right of use asset and present value of future lease liability we have calculated. So we have calculated this. Now, what is the accounting entry? Accounting entry is right of use asset account debit to lease liability. A simple accounting entry. Right of use asset account debit. Account debit to lease liability. By how much amount? 50 lakh 228. Sir, how this 50 lakh 228, how this amount will be depreciated? 50 lakh 228. Friend, since the purchase option is there, right? So the right of use asset has to be depreciated over the useful life of the asset, over the useful life of the asset, not on the useful life of the lease term, rather over the useful life of the asset, okay. over the useful life of the asset. Now, what is my depreciation? My depreciation amount. What is my depreciation amount? My depreciation amount is depreciation amount every year is how much? How much? 50 lakh 220 divide by 40. Divide by 40, not divide by 10. It is divide by 40. Why? Because there is a purchase option and lessee is reasonably certain to avail the purchase option, right? So you have to depreciate 1,25,000 over a period of 40 years, right? Over a period of 40 years of 40 years, which is useful life of the property. Okay, which is useful life of the property. Sir, how this lease liability schedule has to be, how this lease liability schedule has to be made. So let's make a lease liability schedule. Let's make a lease liability schedule also. This is my lease payment. Okay. This is my opening balance of lease liability. This is my interest cost at the rate of 9.04%. Okay. This is my closing balance. Okay. What is my opening balance? My opening balance is 50 lakh. My lease payment is this one. Okay. My lease payment is this 55 lakh. So let me put the lease payment in negative number. Okay. In negative number. Sorry. So instead of putting in negative number, I'll reduce that. Interest cost. So what is my interest cost? Opening liability minus beginning of the year payment, right? Multiply by 9.04%. This is my interest cost. And what is my closing balance? Opening liability minus lease payment plus interest cost. This will become the opening balance for me in the second year. Same formula I'll apply, right? So again, what I'm doing in the second year, so let me show you again. In the second year, my opening liability is this one. I have paid this one, this much amount. So whatever is the balance, I will apply 9.04%. Right? This is my closing balance. Okay. This become my closing balance. Okay. So in the next year, this will become my opening balance. Right? This will become my opening balance. Okay. Same formula I'll apply. Sorry. Right. Again. Right. At the beginning, this is the beginning of the 10th year, right? These are the beginning, opening, these are the beginning of year 1 to year 10. Now, at the end of year 10, so friends, if I talk about this year 10, so this is my opening balance, 34 lakh. I have made a lease payment of 6 lakh 52,000, right? So 34 lakh is my opening balance at the beginning of year 10, right? But and I have paid 6 lakh 52,000. my closing balance should only be 2751. But since 30 lakh I am paying at the end of the 10th year, that is why this 248 of interest cost is also there. So my closing balance at the end of year 10 is 30 lakh, and I will pay this 30 lakh here only. So this is my closing balance of 30 lakh, and I will pay this lease payment. I will pay this lease payment of 30 lakh now. So I'll pay this lease payment of 30 lakh. So this has become 30. I'll pay 30 minus 30 lakh, right? As a exercise price of the purchase option, I'll pay. As an exercise price of the purchase option, I'll pay. Right? As an exercise price of purchase option, I'll pay. This has become zero. This has become zero. Friends, in this question was little complex in terms of two, three different things. Number one, in this question, the purchase option was there. That is number two, in this question, the lease incentive was there. Number three, in this question, the due to the purchase option, the depreciation was also charged on a useful life of 40 years, not on the lease term of 10 years. That was a different aspect in this question, right? And of course, I have also given you the highlights about how this right of use asset and lease liability is measured, right? And in this question, so the annual lease payment was in the beginning of the year, but the exercise price is at the end of the year. So that is one of the tweak which is there in this question. So you have to be very careful about, just about you doing your calculation, that the annual payment calculation are at the beginning of the year, but the exercise price is paying at the end of the year, right? So this is how you need to do this kind of calculation, right? This is how you need to apply your knowledge, your mind to solve these kind of conceptual problems, right? I hope you guys are clear on that. If you have any question, please do let me know. This is the last question of the session. Please do let me know if you have any question. Please do let me know if you have any question. Friends, have you understood this question? Have you understood that the right of use asset has to be initially recognized and measured on the basis of the present value of the lease payments, right? If you have paid anything before commencement date, that is also required to be credited. Initial direct cost is also required to be, added to the right of use asset. Present value of the asset retirement obligation is also required to be added. It is also required to be added to the right of use asset. Friends, have you able to understand this entire concept? Subsequently, the depreciation is required to be charged to the right of use asset. If purchase option is not there, it will be on the basis of the lease term. If purchase option is there and lessee is reasonably certain, then of course, while calculating right of use asset, you have to take the purchase option also. Okay. You have to take the purchase option also. Okay. And you have to depreciate your right of use asset over the useful life of the asset, not on the only to the extent of lease term. Why? Because this asset will be your asset. You will be using that asset, and you have to depreciate that asset over the period of use, which is useful life. Lease liability, of course, you need to pay the lease rental, you need to recognize the interest cost, and this is how your lease liability will become zero, will be nullified at the end of the lease term. Abdul is asking, sir, why no interest for 30 lakh last payment? Abdul, if you will look at this entire lease payment schedule, what is the opening balance? 50 lakh 228. How this opening balance came? The opening balance came by putting the present value of the future lease payment plus exercise price, right? All the lease payment are on the beginning of the every year. 30 lakh rupees is payable at the end of the year, right? This is how this 50 lakh has been calculated. Now your liability balance on the beginning of the first year is 50 lakh. Let's say on the day one, commencement date, 50 lakh liability is there. On the commencement date, the payment has been made for 5 lakh rupees, right? So on the commencement date, what is the outstanding lease liability? 45 lakh rupees, right? 45 lakh rupees. Now the year has gone. Now the year has completed. On 31st March, this is your 1st April. This is your 1st April. This is your 31st March. 31st March. Sorry. So this is opening balance is 1st April. This is 1st April. And this is your 31st March. Okay. The closing balance on the first year is 49 lakh. Again, this become your opening balance, means second year, first day. This is your second year payment, net payment, right? Because net you are paying only 350. This is your interest cost and this is your closing balance. This is how at the beginning of the 10th year, when you reach 10th year, the first day of the 10th year, you have a liability of 34 lakhs sitting in your books of accounts. On the same day, that is the 1st April of the 10th year, you have paid 6 lakh 52,000. You have paid 6 lakh 52,000. So if you will deduct 34 lakh minus 6 lakh 52,000, Abdul, what is the outstanding liability on the 1st April of the 10th year? What is the outstanding liability on the 1st April of the 10th year? What is the outstanding liability? 27 lakh 51,000. 27 lakh 51,000 was the outstanding liability. On the 1st April of 10th year, you have paid all the lease payment. You have paid all the lease payments. On the first day of the 10th year, your outstanding liability is 27 lakh 51,284. Now you have to charge interest for the entire 10th year. When you reach on 31st March, you will charge an interest of 9.04%, which comes out at 248,716. Now on 31st March, your closing liability become 30 lakh. And now on 31st March, you are paying 30 lakh rupees. On 31st March, you are paying 30 lakh rupees. As simple as that, you are paying 30 lakh rupees. Is that clear? Is that clear? Right? So that is why I presented like this 10th only, so that you will be able to understand. So क्या हुआ? मेरा 34 लाख मुझे 10th के बिगिनिंग में मेरी लाइबिलिटी थी, 652 मैंने पे कर दिया, मेरी लाइबिलिटी 2751 ही है साल के शुरू में, साल के बिगिनिंग में. एंड में आई विल पे 30 लाख रुपीज. सो लाइबिलिटी शुरू में 27.5 है, पे 30 कर रहा हूं, तो ये पूरे साल जो मेरी लाइबिलिटी आउटस्टैंडिंग रही, इसका इंटरेस्ट है 2.5 लाख. दिस बिकम 30 लाख एंड आई पेड 30 लाख. Guys, I hope you have now understood it. Yeah. So today we have, when we started the session, of course, we did the revision, and today we have discussed the concepts of implicit rate, interest rate implicit in the lease, initial direct cost, and we have also covered the concept of right of use asset recognition, lease liability, what are the components of the right of use asset, how this right of use asset and lease liability is recognized initially, and subsequently what, how it is going to be depreciated, how it is going to be impaired, right? And how this lease liability, how this interest cost has to be charged on lease liability, and what is the accounting entry for payment of lease liability. This is what we have discussed today. So now I'm good to conclude my session. I will wait for another 30 seconds. If you have any question, please raise your question on the ICAI query link. If you will not have any question, I would be happy to conclude the session, right? Please let me know if you have any question so far. Please do let me know if you have any question. I believe you guys are very well able to understand the concept today. Thank you, Shruti, for the nice feedback. Any question on today's session? Any question?
Friend, just an announcement. Tomorrow is Sunday, and tomorrow there will be the fourth class on Ind AS 116. So there will be a class tomorrow, right? I will be taking the fourth class on Ind AS 116. Right? Okay, there is no question. Thank you so much. Bye bye. Take care, students. Thank you.